Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence. Dollar remains the talk of the town. Now, since Friday, we haven't received any major data leading to trending markets, but there is some sort of profit taking that's happening, especially when you see the Asian currencies. Europe's situation isn't all that better, with Volkswagen considering factory closures in Germany. In fact, option traders are starting to price a top in the euro. So the premiums for risk reversal strategies, which are starting to rise. So risk reversal is basically premium which is being paid to protect against a drop in the euro that has started to rise. Good morning, JK. In the absence of any major data, any thoughts on these recent moves? Do you think we may see further gains for the dollar from these levels?
Hey, good morning, Swaraj. Yes, I think in the absence of US and a very thin market, focus was on what was happening in Europe. And most of it, I would say none of it was good news for the European, situation overall. Although, European stocks did hit a new high, but there was no major gain for the market. Now, one important thing that happened was the right wing in Germany won election in two of the German states, and this is happening after similar thing happened in France. And these political developments are not looking very good for overall Europe because the far right and the far left are undermining the confidence of the investors, particularly in the European region. And so it's a wake-up call for the European parliamentary elections in September next year. Of course, it's quite far, but then the things are building for major shift in the composition of the leadership in Europe, and it will have a major implication for the medium-term policies, unification or integration policies that Germany and France and others have been pursuing to implement. So that's something that did not help the at least the bond market, because the bond yields in Germany and across Europe was higher. In Germany, 10-year was up by about 4 basis points, and then 2-year was up by 3 basis points. So, then, yes, as you said, the German car maker Volkswagen also warned that it might close its plant, and a lot of focus on having to cut costs deeply. And so it can be another challenge, because that can lead to a lot of unemployment, although it will not happen so easily, as the unions are quite strong. And if it does happen, it will be the first time this closure happens in 87 years history of the company. And also, the data yesterday on PMI manufacturing confirmed that the manufacturing in Germany, or rather in Europe itself, is continuing to be in the contraction zone. So overall, nothing really that makes one smile at Europe. And of course, Euro has moved only in a very narrow 10 BP range, and the stock market was not moving without much influence. On the contrary, as we have seen, recent data from US has been able to alleviate some of the recession fears that investors had harbored after the data on unemployment last month. And since then, we have had a good number on GDP. We have had the consumption increasing as per the PCE data that came on Friday. So I think now it's almost given that 0.25 will be the measure by which Fed will cut rates in September. Although we have a host of labor market indicators, starting with ISM manufacturing today, which will where we will see the employment component, the ADP payrolls and JOLTS data tomorrow, challenge job cuts and weekly jobless claims on Thursday, followed finally by the non-farm payroll. Of course, after the hefty revision that we saw of 8,18,000 in the non-farm payroll of the last 1 year, I'm not sure whether investors will really look at the non-farm payroll number with any credibility. But then unemployment rate is something that we'll definitely look at, because that seems to be the one which is more reliable and does not undergo any revision. So overall, dollar is definitely looking good for more correction, but possibly we need some trigger for it to move further higher. Technically, it does look like it can move towards 103 from the current levels, and euro probably going to 1.0950. But we look at the data, upcoming data for, because if we see the unemployment rate still inching up, then it can lead to some more sell-off in the dollar as well. Yes, speaking of quietness, I think Indian market was quite reflective of that, and there was no change in the Indian rupee. There was no change in the RBI approach for the rupee. The inflows were well absorbed by PSU banks, just above 80 levels, and took the rate back to its somewhat equilibrium level above 83.90 now. And that was the story for the rupee, and nothing different from what we have seen for several weeks. And Indian PMI manufacturing was somewhat lower, lowest number in the last 3 months, possibly indicating some slowdown in the demand, but nothing alarming as far as that is concerned. Indian stocks, no surprise there, hit all-time new high once again, although it did correct from the peak for a small down move. Overall, India markets are still looking good, rupee looking stable, thanks to central bank, and possibly we are also looking at the global developments and some global trigger to get a further move on the Indian markets. Of course, rupee needs a very large figure to move out of this range of 83.75 and 84. Thank you.
Thank you, Rick. And today we discussed, of course, the situation in Europe overall remains grey. Those stocks are hitting all-time high. There is a lot many other struggles, especially with the recent Volkswagen warning of plant closures as the car maker tries to cut costs. But of course, how that will play out will depend on how big of a power the unions have. PMI manufacturing from Europe continues to be on the contraction zone, while Euro trades in very narrow ranges. Recent data from the US has also helped investors alleviate some recession fears. A rate cut by 25 basis continues to be the most priced scenario in September. And of course, this week there is a host of labor market data, including the unemployment rate. For rupee, as JK mentioned, no change in RBI approach. Inflows observed by PSU banks around 83.80, and which took the rate back above 83.90. Indian manufacturing PMI came in lowest in lowest in last 3 months. But Indian stocks hit all-time highs yesterday. That's it from us today. Thank you for listening. Tune in tomorrow for the latest in the financial markets.